This time around, I thought we'd take a look at the price of gold. It had a good 2023 in the end, gaining by, I think it was about 13%. We did see very briefly new all-time highs for the price of gold. So I thought, let's take a look at the short, medium and longer term for gold from here. There's quite a lot of, I thought, were quite bullish outlooks for gold, which again can make me a little bit wary. If everyone's saying that a market should go in one direction, it's more often than not the case the market does completely the opposite. And I saw quite a lot of new highs expected from various investment banks when it comes to the gold forecast for 2024. But let's take a look at it in a bit more detail in a second. Before we get into that, just a quick word about some of the things I do. I've run a trading course for a couple of years now. As part of the trading course is a WhatsApp group. You can join that by going to the website davidjonestrading.co.uk. If you use the code YouTube, you get a 20% discount off the first month. In the WhatsApp group, I talk about markets I'm watching, trades I'm running, any questions that people have throughout the day. So it's fairly active. And like I say, try it out for a month and see what you think. If you go to my website on the homepage, you can sign up for the weekly newsletter that I send out free of charge. That again has an outlook for markets I think are interesting in the week ahead, and also a trading tip every week. So if you go to the website davidjonestrading.co.uk, you can put your email in and sign up for the newsletter. Right, let's get into it. Let's talk about gold in a bit more detail. So spend a bit of time talking about the recent news about gold, then we'll jump onto the charts and take a look at the technicals in a bit more detail and try and figure out where the opportunities might be. So like I said, in 2023, it was a good year for gold. It ended the year up by 13%. We briefly, very briefly, saw fresh all-time highs for the price of gold. Then it gave back those gains. A couple of things were helping here. We did have a weaker US dollar for much of 2023. Then, of course, in October, we saw the start of the Israel-Hamas conflict. And as we know, gold is seen as a safe haven in times of trouble. So I think that was something that brought investors to gold in perhaps the last quarter of the year. And you can see this if we look at the largest exchange traded fund for gold. So gold's largest ETF, the Spider Gold Trust, that saw inflows of $1.5 billion in November of last year, which was the biggest amount. I'll put the graph up on the screen now. It's the biggest amount since March 2022. So biggest inflow for 18 months. And it broke the run of 5 months of withdrawals by investors from the fund. So investors were getting turned off by gold. And then we saw, as you can see from the chart, that big influx in November. So when it comes to forecasts for the years ahead, if the world economy performs better than expected, and some people are still worried about the threat of perhaps a double surge in inflation or even a global recession. But if we do see perhaps a softer landing for the world economy, this should be bad for the price of gold. If things are going well, and at the time of recording this, we've seen the Nasdaq and the S&P both hit fresh all-time highs. There's very much a risk appetite in stock markets. If the economy and other markets do well, then people will, you'd expect, turn away from gold. But if you look at an investment bank like JP Morgan, they are forecasting perhaps a slight dip in the price of gold over the months to come, but ending the year hitting new highs and a target of, I think, of around about 2,300, something like that, into 2025. So they're quite bullish on gold. And that's a narrative, I think, that we hear from plenty of sort of analysts at the moment. Rate cuts could have an impact. We are expecting the US Central Bank, the Federal Reserve, to cut rates in 2024. That could have an impact on the US dollar. Could see a weaker US dollar. It should affect yields of short-term government bonds. And short-term government bonds, you could say, compete for the affections of investors for when it comes to a safe haven. So if we see the appeal of bonds dropping, that's something that could help the price of gold. So rate cuts could be something that helps fuel the appeal of gold. But let's see. I think in recent weeks, I found it quite a choppy market. I think it's been quite a difficult market from a trading point of view. But let's take a look at both the trading and investing outlook for gold in 2024 by jumping on the charts. Let's take a look at the gold price. First of all, this is the big picture. This is the last 3.5 years. This is why it's been something of a confusing market for me, really. You can see we're broadly sideways for the last 3 years or so. We have the odd run up above 2,000, but historically these haven't lasted very long. The current run above 2,000, which started in about November 2023, is the longest we've spent. The price of gold has spent above the $2,000 mark, but fairly scrappy trading, big swings, but no real overall direction. So it is for me a bit of a confusing market, gold, but we'll have a look at the more recent trend in a second. But I think it's always a good idea, when we come to a market that perhaps haven't looked at for a while, just to take a look at the bigger picture. So this is where we are, broadly sideways. Can it start to build a new range now above $2,000? And this ends up being the springboard for a move higher. Let's see. But let's zoom in a bit to what's been going on since October last year. So here's the trend that I've picked up on. And even that's looking a bit scrappy. We had the move from October 23 after, of course, the conflict Israel-Hamas started. We saw a rally in the gold price from around 18.20. Then this very strange move up at the start of the week commencing the 4th of December in overnight trade, pushing out to that fresh all-time high, then giving it up very quickly. And since then, it's been scrappy again. I think scrappy is a good description of what's been going on at gold at the moment. If we take a look at the RSI, that's not really adding much either. We have an RSI that's trading around about 45-50%. The last time we had an extreme was up here on that move higher, up to 2140, 2145, that sort of area. At the moment, we haven't gone overbought or oversold. So what would I do here? I'd probably still be a buyer. I think that's the trade I'm going to set up. If we take the view that we have seen support on the way up, 1,928, the lows from mid-November. The more recent major low for me around about 1,973. So what I'm going to do, I think, is leave an order. I'll leave an order to buy if the price of gold trickles back towards $2,000 an ounce. So about $20 below where it is now. And I'll put a stop loss halfway between these two levels. I think that's what I'm going to pick. So I'm going to go put my stop loss in around about 1950. So I'm a buyer at 2,000 with a stop at 1950. I think it's an okay trade. It has fallen out the trend line, but I am thinking that perhaps this 1973 to 2,000 area provides some support for the price. Let's set that trade up. So I'm on the trading platform. This is my trading partner who I work with, and I'm moving all my trades for this year through this company. To find out more, if you go, there's a link in the description. But if you go to bit.ly/David Trade, you can open an account there and start trading. The reason I trade with this company, I've worked with a couple of the senior guys before in a previous life. There are tight spreads, really tight spreads, which is important for me when trading. And that's it, really. Really straightforward platform and app to trade with. And I'm going to be doing lots of webinars and training for people who join up with this broker through me. So give them a try. Anyway, let's set up our trade for gold. So the market's currently trading at 2023. I'm going to put an order in to buy if it drops to 2,000. I'm going to put my stop in at 1950. Another benefit of this broker is I can trade really small. So if I only want to risk losing, I don't know, a couple of £100, I'm going to put an order in to buy 0.4, so I can trade fractional sizes. So I'm going to buy 0.4 of gold if it gets to 2,000. If that order gets filled, put a stop loss on at 1,950. My risk on the trade here is £200. If I get stopped out, I lose £200. I could trade smaller if I wanted to. So if I trade 0.1 of gold and get stopped out in this trade, I'll lose £50. But for now, I'm happy to risk losing, for example, £200 on the trade. Let's put it back to 0.4. And that's it. I'm ready to go. We'll submit the order. And the order's going to sit there now. So the order will sit there at 2,000. And I'll wait and see if gold does slide back to $2,000 an ounce, then that order will get filled. Let's jump back on the chart. So overall, I think it is positive, and it wouldn't be surprising for me to see it perhaps have another look at 2,100 in the short to medium term. I'm not massively bullish on the year ahead because, it has been as we can see, a fairly scrappy few years for gold. So, but I suppose, we've seen it push out to fresh all-time highs last year. It's not beyond the realms of thinking that it's going to happen again. But I think for a lot of time, it's a fairly unexciting market. Let's see what 2024 brings. But I do quite like the idea of that trade, buying on a dip to 2,000 with a stop $50 away. That's it for me on gold. Let's see how it performs. It's always a popular one with investors and traders alike. We'll take a look as usual in the live stream on Friday, the live streams that I run every Friday as the US market opens officially, 2:30 UK time, 9:30 in the morning New York time. So we'll take a look at those. If you're not subscribed, click on subscribe. You get notified when all of these things start. Go to my website to find out more about the WhatsApp group that I run, the trading course, and also you can join the weekly newsletter and get a trading tip by me, normally sent over the weekend. But for gold, we'll leave things there. So until the next time, good luck with your trading.